Parag Thakkar, fund manager at Fort Capital, with us on the show. Parag, good morning. Thanks for joining in.
Thanks for having me on the show.
Constructive, deploying cash, or you believe there are more downsides ahead?
Deploying cash.
Why so?
So basically, simple I told you on the last show also that when we were at 26,000, definitely I was thinking that market was looking overstretched. And September numbers results were going to be bad for many companies. We knew that, right? Because it was a prolonged monsoon. Plus, after elections, the government spending was less. So we knew that September quarter results are going to disappoint markets, and Nifty was at 26,000. So we sold and we created cash, 20%, 25% cash. And now that, as you heard from Kalyan Jewellers, many things have started picking up on the ground. Okay, festive consumer durables, if you ask, jeweler you just interviewed, two-wheelers, for example, Royal Enfield, last month numbers were good. They are saying that this month after festive also, like Kalyan Jewellers, they also said that after festive the momentum is sustaining. Many things, so for example, I spoke to two cement companies in last 2 days. They are saying that government spending is coming back, right? And in the bottom of the cycle, remember, many companies do right things. For example, Remco Cement is one of the company where we are at the bottom of the cycle. There is a bloodbath in cement market. Right? At this time, they are reducing debt by 1,000 crores by monetizing their unused land parcel. Right? So it's a very right thing to do. When you reduce debt at the bottom of the cycle, you become more competitive. You are adding capacity at $35 a ton. Right? So when entire cycle turns, because how long industry can sustain this kind of profits where so many companies are bleeding? Right? So at the bottom of the cycle, if you buy a good company which is taking right steps.
But are we at the bottom, Parag bhai? That's the question.
So I'm saying cement, I'm 80% probability that in next 1 or 2 quarters it will be bottoming out. And if you hear the Shree Cement call, they are also saying they are seeing green shoots in the market. And January, February, March seasonally is a strong season for cement in India, because that is where the government projects are getting executed.
Okay.
Right? So I'm saying that we are just nearing the, and this is not only true for cement, many other companies I would say. So the situation has become like that because dollar index has gone up after Trump has come to 106.4, or say US 10-year is at above 4.4. So macros are looking very scary. FIs are selling, even retail HNIs are selling. And so now the situation is reverse of what it was in 26,000 Nifty. You know, that time the September quarter was looking bad, but still Nifty was rising. Now, because of the scary macros, we are at 23,500. And actually, December and March quarters are looking better because government spending is going to come back, and festive season has created some momentum. And because, as you rightly pointed out on the show, that November is the highest marriage season, right? So some of the consumption things will pick up in November. So it's a good situation where you have a contra buying opportunity in many stocks.
Parag, you talked about how some sectors may have bottomed out. You mentioned how cement usually has it tough in the quarter that we've seen. Any other sector that you feel, or any other stock that you feel the worst is behind us? Stock price is pretty well priced, which means currently it becomes a good stock to add to one's portfolio or one sector.
Yeah. So first of all, see, I'll start with the fact that the starting point valuations were high. That was one reason. Trump trade has begun, so dollar index and US 10-year bond yields are rising. So FIs have been selling. Right now, in this entire negative macro setup, I would like to highlight the positives, right? Positive. For example, if you see the results, or even I would highlight first in the large cap bucket and then in the mid cap and small cap bucket, the results which were good, which were completely ignored by the market because of FII selling, right? So first of all, let us come to large cap. Large cap, HDFC Bank did what it was required to do. They brought the CD ratio down by 5%. Their ROE is still sustaining at 1.7, 1.8%, correct? And their asset quality is best. Credit cost is 50 bips, right? 50 bips on a lower loan book growth, which is just 6% loan book growth, because they are forced to bring down their loan book growth because to bring their CD ratio down. Their deposit franchise continues to be strong. They did 1,20,000 crore of deposits this quarter. So that was a good quarter. ICICI Bank, fantastic results. PPOP growth of 15%, which completely beat the market estimates, because now they have a new shot in the arm, which is OPEX. Now OPEX to asset ratio for ICICI Bank is coming down. right? So I think ICICI Bank continues to consistently surprise market on the positive side, and rightfully so. Now it is trading at a significant premium to other banks, and they are sustaining their ROA about 2.2%. HDFC, SBI, such a large bank and a proxy to Indian economy, credit cost only 50 bips. What more you want, right?
No, the deposit growth guidance didn't bother you?
No, that's okay. In SBI, you have a CD ratio which is low. So in SBI, you are not required to grow deposits at a rate which you are growing advances or at a faster rate than your advances, right? SBI has a basically, see, I'll tell you, in the banking, the buzzword is asset quality now. Because you have seen the pockets of MFI and various stresses. So if these three large banks of India, HDFC, ICICI and SBI are showing you a credit cost of 50 bips, it's a big positive. Because at least they know their customers, they have lended to their known customers, right? And they have not given some unsecured MFI loans, which will go bust. So it's a big positive, and the valuations have become extremely attractive. The ROA divided by price to book, if you do, almost it is 1x. PG, if you see, the growth rates are 12 to 15%, PEs are below that, right? So that is one banking. I'll come to auto, Mahindra and Mahindra, excellent result, again beat market estimates. Tractor is 55% of the profits. Tractor has bottomed out. For example, last month, the estimates were 50,000 tractors, they sold 65,000 tractors, right? And tractor is a very high margin business for them. On November 26, they are going to launch 2 new SUVs, electric SUVs. Right. So auto launch cycle is also good. If you remove their net cash in the standalone balance sheet and subsidiary value, the cash flow yield is 6% on their EV of 2,50,000 crore, which is left after reducing this thing, right? I just spoke about Remco, that at 20,000 crore market cap, at the bottom cycle they are making 1,000 crore cash profit, which will only improve because the entire industry is bleeding. Sure. Government spending is back in last 2-3, I would say last 1 month. Okay, and they are now reducing debt by selling the unproductive land. Right now. So there are many. Emcure Pharma, just to give you 2 more examples. Emcure Pharma, good decent company, negligible debt, good promoters, 20% revenue growth, 38% EBITDA growth. So operating efficiency is shown here, right? And they are guiding for 15 to 20% growth. They are, if you read the call, they have said that our only goal is to improve margins, which means their ROC will go up, right? Mindacorp, second example, 8% revenue growth, 26% PAT growth, 12% EBITDA growth.
You've got 7 solid companies.
Again operating efficiency.
This is amazing.
See, I think corporate India has realized everybody is looking to deleverage. The other thing which I want to bring down on the because today
we have 30 seconds. 30 seconds for this.
Everybody is negative, right? What I trying to point out is where in the world you have a debt to GDP of 83%, where in the world you have a corporate India completely under leveraged. Banks are sitting on good amount of tier 1, strong balance sheet, and I would say the most strongest regulator. So there is no chance of any financial scams or anything going ahead because our regulator is so sharp. They spotted this MFI stress much earlier. They spotted this unsecured personal loan stress much earlier. So we are not a euphoric economy.
Got it.
We are a strong, solid, stable economy.
Got it. Thanks for these things, Parag. By the way, viewers, don't construe these as buy or sell recommendations.
Yeah, sure.
Please do your own due diligence.
You gave this superb list. And of course, I don't think there's any buy recommendation or anything like that.
Yeah.
But
these are just observations.
And the filter was very clear. Companies that have given good results, but the market has ignored it. Now, having said that, what are the 3 or 4 kind of stocks that you are seeing that have come down enough, where the valuations question no longer arises and strong enough? Let's remove just the corporate results filter.
So I am saying that, see, banking is where valuations have become extremely attractive in the case of HDFC, ICICI and SBI. So see, as an investor, you have to buy 2 things, right? Either you are at the bottom of the valuation or you are at the bottom of earnings. So my sectors are, in the bottom of the valuation, you have banks, HDFC, ICICI, SBI, And bottom of the earnings, you have cement, where I like various companies like Remco, Shree and Ambuja and all, where I feel that cycle is bottoming out. So these are the two lists, and of course Minda Corp and Emcure Pharma are out of these sectoral themes on a bottom-up basis. For example, yesterday I saw, and this is not the stock in my portfolio also, I just saw results. Lumex Auto reporting good numbers, Kirloskar Oil has reported good numbers, right? In auto, apart from M&M, of course.
Would you look to adding these counters today when you go back?
So some of the stocks we need to see, find out the reason for how this, so Federal Bank, again, it was on your list, so that's a very good number. Very well managed bank, again no MFI stress, and now Mr. Manian coming in, he will give a strategy refresh in December. There will be a lot of excitement in that counter also.